Welcome. In this video, we will examine a tweet about how XCN will be in the future. But first, let's analyze XCN on the short-term chart. Please watch to the end to understand. Looking at the chart, we can see that there is a clear downtrend that has been going on for some time. The price made a contact with this trend line and received a downside reaction. This suggests that the sellers are still dominant and the price is struggling to break through this trend line. However, as of now, the price is close to this trend line again, and it is crucial for the price to break it. If the price is able to break this downtrend to the upside and hold above it after the breakout, it could mean a change in the market structure and accelerate bullish movements. Because the break of downtrends usually indicates that the market is starting to change direction and buyers are gaining strength. And of course, it is also very important for confidence to retest after the breakout. When we look at the current level of the price, we can see that there is a strong bullish order block here. This region stands out as an area where the price has received support and upward reactions many times in the past. Especially when we examine the price movements that have come to this level before, we observe that each time the buyers stepped in and the price received an upward reaction. Such bull order blocks are often known as areas where big players and institutional investors buy. So every time the price comes here, buyers step in to counter the selling pressure and cause the price to rise again. A similar scenario could be playing out right now. If the price encounters a strong enough buying interest in this area, a new bullish wave is likely to start from here. But there is also such a thing that you need to be careful as the order block starts to weaken as you get a lot of contact and reaction. There is a significant bearish order block in the upside region on the chart. This area stands out as an area where sellers are concentrated and where the price may face strong selling pressure in the past. However, the interesting point is that the price has not touched this area yet. Usually, bear order blocks are considered to be levels where the price may face strong resistance once it reaches here. So if the price reaches this level, large sell orders may come into play and cause the price to move down again. The fact that the price has not approached this level so far suggests that the selling pressure in the area has not been tested, and this area could still act as an active resistance. In case the price reaches here, it will surely see a downward reaction, because it will be the first time that the price has not reached this order block before. According to the Elliott wave theory, the first and second waves on the chart have been completed, and the third wave is in the process of forming. According to Elliott's rules, the third wave is usually the strongest and longest, so a strong move can be expected here. In particular, the minimum target of the third wave usually corresponds to the 618 Fibonacci level. This level is a zone that traders and algorithms often follow, and volatility is likely to increase once the price reaches it. If the price breaks this level, it is possible that the third wave will become a prolonged wave and move to higher levels. But be aware that the third wave comes suddenly. There is a distinct ascending channel structure on the chart, and the price seems to have received a strong reaction from the lower band of the channel. This ascending channel helps us to understand how price action fluctuates within a trend and how support and resistance levels work within this structure. Especially the lower band of the channel, when the price reacts from this area, it usually initiates a move towards the upper parts of the channel. However, at the moment, we see that the price has not yet reached the middle band. This middle band works like an intermediate resistance level within the channel, and there is usually some volatility or indecision when the price approaches it. When we look at the previous movements, we see that the middle band has worked quite well. So once the price reaches it, it may linger there for a while, maybe even retest and gather strength. So we should watch to see if the price will break it when it reaches the mid-band. When we look at the Bollinger Bands, we can clearly see that the bands are getting narrower and narrower. This narrowing usually indicates that volatility is decreasing in the market and the price is tightening. The narrowing of the Bollinger Bands can be a harbinger of a strong move ahead. When we look at previous band expansions, the price usually made a strong breakout and moved in a certain direction after the bands tightened. The narrowing of the bands at the moment may indicate a period of indecision in the market. In other words, the price may consolidate by making fluctuating movements within the bands for a while. However, as the squeeze continues, we may see an explosive move when the bands narrow enough. In particular, the decreasing distance between the lower band and the upper band may indicate that the market is moving in a tight range, and big players are starting to take positions. One should wait patiently for the Bollinger Bands to break out. Looking at the MACD indicator, we can see that it is below the zero line and preparing to make an upside crossover. This usually indicates that momentum is starting to shift and the price is setting the stage for an upside move. The MACD line in particular is getting closer to the signal line and an upside crossover of these two lines could lead to an increase in positive momentum. Looking at previous crossovers, we can see that in similar scenarios, the price started a bullish move. For now, the MACD is below the zero line, indicating that the price is still in a weak zone. But if the crossover materializes, the price could gain some upside momentum. If the MACD line crosses above the signal line, this is usually considered a buy signal and may indicate that the bulls are starting to gain strength in the market. The price will surely break the downtrend when the MACD crossover occurs. Looking at the RSI indicator, we can see that it is moving in a long-running downtrend. This trend, in line with the price action, suggests that the market has been weak for some time and that buyers have not been able to muster enough strength. If the RSI manages to break this falling trend line to the upside, this usually indicates a positive shift in momentum and could signal a strengthening in price action. Especially when we look at previous price action, we can see that the price reacted strongly after the RSI's trend breakouts. Therefore, a breakout at this point could be an indication that buyers are starting to gain strength in the market. It should also do a retest for confidence after the breakout. When we look at the vortex indicator, we generally follow the movement of two different lines that help determine the trend direction: the blue line and the red line. A higher blue line indicates an uptrend, and a higher red line indicates a downtrend. Looking at the current situation, we can see that the red line is still on the upper side, and the selling pressure in the market continues. This suggests that the price has been under downward pressure for some time, and that buyers have yet to take full control. However, an important thing to note here is whether the blue line tends to approach the red line. If the blue line makes an upward move and starts to cross the red line, this can often be a signal that a trend change is imminent and an uptrend may begin. If the blue line moves up, the uptrend has begun. The 200 EMA is an important level that is often used to determine the direction of the long-term trend. Although the price tried twice to break above the 200 EMA, it failed to sustain above this level each time. This suggests that sellers in the market have built a strong resistance at this level, and buyers are having a hard time breaking through this zone. On the first attempt, the price tried to break above the 200 EMA, but faced a rejection at this level. Then, on the second attempt, the price pulled back from the same area. This suggests that the 200 EMA is a critical resistance level, and unless it is sustained above it, there is a strong possibility that the downtrend will continue. We need to see the price break above the 200 EMA. The tweet shared on OnyxCoin's X page explains the contents of the XCN Goliath announcement. And now let's take a detailed look. First bullet point. This is an announcement about the launch of Layer 3 technology. Layer 3 is a protocol typically used to make decentralized applications run faster and more efficiently. Ledger points. Incentive is an incentive system that will allow users to earn rewards for performing certain tasks. With this system, XCN users will be offered extra incentives, aiming to increase the use of the network and encourage interaction. The second item, this is an announcement about Layer 1's testnet in 2025. Layer 1 is usually the basic building block of a blockchain. This announcement states that a white paper will be published with technical details of the Layer 1 network, which will enter the testing phase in 2025. The testnet is an environment used to test the network before it is rolled out on the main network. This is seen as an important step to ensure that XCN's blockchain infrastructure is robust and reliable. The third item, this announcement states that Layer 1 will transition to the mainnet in 2026, and a network structure will be created that aims to connect with banks. Mainnet is the stage where, after the testing phase, users will be able to make real transactions, and the network will be fully operational. Bank connectivity mesh refers to the creation of a network structure to enable banks to integrate with that blockchain. This step aims to establish a strong connection with financial institutions and further the adoption of XCN in the global financial world. These announcements are seen as a big part of OnyxCoin's future growth strategy. In particular, the Layer 1 testnet and mainnet migrations aim to accelerate XCN's adoption in the financial sector and accelerate the adoption of blockchain technology. In addition, the integration with banks is a strategic step towards bringing XCN to a wider audience of users in financial institutions. These developments could increase the long-term potential of XCN Coin, providing significant opportunities for investors. And if XCN can gain a foothold in the financial sector, this project will grow a lot in the future. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.